All right, folks. We had terrible earnings from Microsoft, Google, Amazon. They get absolutely killed. Apple, okay earnings. And then Apple comes out with, a warning about iPhones. And the market's up. What are you bears doing out there? We're giving you so much fodder to take this market down. Why aren't we down to 3,500? We're not even near 3,600 or 3,700. We're above 3,800. Let's talk about value. Value stocks are holding this market up, something we've been talking about on the show for years. Finally coming to fruition. There's no better value on Wall Street than this show, Pre-Market Prep. Let's get going, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Morning, folks. Green on the screen, up 9 1/4 handles at 38.2450. We're just getting in an area of limited resistance here up to 3,900. You guys can see it on the upper right chart. The buck took a hit, a little bit of a rebound, up 32 cents, 110.32. TLT, just nothing, up 28 cents. You have crude in the red by 70 cents, but still holding 90 at 91.12. Gold trying to get over 1,700, but failed the last couple sessions, lower, down 590 at 1674.60. Silver back under 21, down 7 cents at 20,840. Bitcoin, rug pulling Bitcoin. We're going over 21. Nope, we're under 20, down 1135 at 19,710. And Ethereum futures.
Chart me, Joel. Chart me.
I did
Chart
hit it.
me.
Ethereum futures. No, everyone just wants to see me.
Trust me,
Ethereum
I do too,
futures are in the red by $127.50 at 47.15. Let's just go to the SPOO chart again here, because I want you to tell me where there's resistance in this market between here and 3,900. Uh-oh.
Cuckoo. You got to invite us on, Joel. You didn't even invite us on today. Come on, my friend.
I'm not invited either.
We're
I
not
just
invited
sit in the
on,
background
Dennis.
talking to myself. It's what I do.
Well, the
I just
answer
talk to
is there is no
myself.
resistance.
Well, I ask you a question, you answer. You look at the
We
chart.
can't when we're in
Do you
the
need
background.
a formal invitation?
I wasn't even allowed. It says It says in the background.
That was Mitch. That was Mitch.
And you
Mitch
could be
did that. He can't. Mitch. I'm gone one day. One freaking day, and this show just goes to pot. I just can't take any time off. Man, I got to write everything out.
Joel goes more than one day, though.
I have a new favorite state to add to my list. You want to know what state that is?
Yeah.
Well, first of all, you know my favorite state, right?
Morton's.
What?
Michigan?
Michigan. Okay.
Oh, your
I hope
steak.
so.
I thought you said steak.
Oh,
Like
no.
I'm eating steak. I
Filet
thought you were going to tell
mignon.
me about a good steak you ate when you're
T-bone.
on vacation.
Wow.
I was all excited and drooling here.
T-bone.
Okay. State. STATE. Number one, Michigan.
Yeah.
2, 3, and 4 are kind of muddled together. But take a guess.
Florida.
Ohio.
Ohio's number 2.
Okay.
Closet Buckeye fan over here.
Okay. Keep going. Keep going. Down south. It's the other
south? Georgia, Florida.
Florida. Yep. And then Florida.
All right, Orlando. Tallahassee.
That's not a state, Mitch.
He's asking for states.
Oh,
Yeah,
I thought we were
states.
going in.
Not T-bones,
inside.
not
All right,
cities.
all right.
Okay,
talking
and then
about
the
states.
2 others that are officially on the list, Charleston. Yes, I love South Carolina.
South Carolina.
Let's put
I
that.
said South Carolina. You don't listen.
Okay.
Nobody
You don't
listens.
like it.
Oregon?
You don't like
But are
it.
you guys ready for the new state?
What is
What's
it?
the new state?
The show me state.
The show me state.
Where the hell's the show me state?
Look at that. Oh, Missouri.
Yeah.
Really?
Missouri.
Yes.
People live in
Missouri.
Missouri?
It's gorgeous, man. Absolutely gorgeous. Our friends
People
moved
live
down there, and that's where I went. I went to Missouri
Holy,
and
you are a world traveler.
saw
Yeah.
the oh my lord, the Missouri River and the Mississippi. I mean, just it's not easy to get there, but yeah, shout out. That's where my niece went to for journalism school. Absolutely gorgeous state. Did some hikes and some biking, and so Missouri makes it on the
So
list. But
he's fresh. He's raring to go
I
here.
am.
Let's
go.
go. Let's talk stocks. Let's move away from the steak talk and move on to, well, where do we want to start here, Mitch? The Take-Two talk? Because Take-Two,
let's do the Take-Two.
mackerel.
The Take-Two steak. Let's talk about that. Let's get into it here.
So glad I had sold it
Yeah.
a few weeks ago.
I tried to put some warnings on at the close yesterday. I didn't know how Take-Two would do here with, of course, computer demand going down. Would gaming demand come down?
Yeah.
And it seems like it has.
Yeah.
Take-Two Interactive Q2 adjusted EPS at $1.30, missing the $1.37 estimate. Sales at $1.5 billion, missing the $1.55 billion estimate. Take-Two sees full year 23 revenue at $5.41 billion and a high end of $5.51 billion versus the $5.89 billion estimate. So even though they're given a big range here, they're still not being able to reach that estimate that they gave for full year 23.
Kind of licking my chops. Obviously, I sold my Take-Two about a month ago. Maybe I'm trying to remember when I sold it. It was 123-ish I sold it at. I think it was in September before the big fall. Then it went down and then went back up there. Now, obviously, taking out the lows. The one issue you've got here is discretionary, right? I mean, and to your point, Mitch, great point. We know AMD had warned. We know PC demand down. Kind of falls in the same category that gaming would be down here as well. EA has been going the opposite direction, holding up. But Take-Two, I don't own the EA and I don't own the Take-Two in the long-term portfolio anymore. I want to put them both back in. I want to put the Take-Two in. We saw EA dip get bought when it reported last week. You wonder if the Take-Two dip doesn't get bought as well. But again, discretionary, going into a recession. It's not expensive anymore, though. It's not a full value stock, but what's it trade like? 15, 16, 17 times forward earnings there, Mitch? Maybe you can take a look for me. The PE is well under 20 now, though. So as it gets down 22? To a certain point, it will become a value stock. And at that point, it's hard to resist. I think this company 10 years from now is going to be much higher. I just don't know about 10 days from now. And it's been the play to lay off because it seems like a lot of these, companies that miss, some of them bounce back, but a lot of the other ones obviously have missed and then just continue to leak. So I think I want to see some stabilization, but it's on my shopping list. I do want to buy the stock for the long-term portfolio and get it back in there. Don't know if I'm striking today.
You're not going to like my comments at all.
What's your comments?
You
think gaming's a fad and it's going away?
I don't think.
Let me guess.
Go ahead.
Lower cars, lower games.
Yeah,
no
lower
cars
planes.
and no games.
And Dennis, I'm so surprised that you like a stock like this when you don't like the metaverse.
Right? This is a metaverse stock.
Oh, this is a good metaverse play. This is a real metaverse play. For sure
it is.
They got the game.
I don't necessarily don't like the metaverse. I just think it's a long ways out.
Yeah.
But I've said before, Disney, Take-Two, the gamers, I think they're going to be major metaverse players. I think
I'll
tell you
games where they just don't kill.
But it's when is it? Is the metaverse 2030?
I'll tell you
it's
what.
It's going to be well after the recession.
The metaverse is on the next harvest moon. I don't know if you guys caught the harvest moon this morning. The blood moon. Yeah.
Blood moon. Is there a blood moon?
You didn't catch it? You didn't catch it?
Last night? No, I sleep at night. I'm tired.
It was this morning. It was at 5:30 a.m. I was up watching it. And looks like maybe
was
the
that
metaverse.
Just in your area? Or was that around here too?
Everywhere, man. What, you think the moon's only on my side of the planet?
I thought maybe the sun's just casting the shadow just right in your area, Money Mitch. I didn't hear anything about a blood moon in Ontario. I didn't know they didn't allow the
Camping World? What are we talking?
Camping World. What's that stock?
Camping World Holdings, CWH or something?
CWH? Okay. I'm more
How
bullish.
do we go to CWH?
I
Because
don't know.
people don't want to
Joel wants
sit
to go
and play
camping.
and kill people. They want to get out and do things. They want to go camping. They want to go do things. They don't want to be in the
What about
metaverse.
Yeti?
Dick's Sporting Goods, bullish. Camping World, bullish. Anything that
You
has
like
to do
those
with
ones.
getting out of the house and getting off the computer. Disney World, bullish. I
Joel,
mean,
the kids can't
this
get
was a
away from the
pandemic
computers,
play.
though.
This was a pandemic play, and hopefully we won't have anything like that for a while.
When's the last
That's
time
it.
you played a video game, Joel?
Oh my gosh.
Was it Atari? Did you ever play a Nintendo game?
No.
No. Was it Atari? Did you play Atari games? Pinball?
He was on Pac-Man.
Space Invaders?
Pinball?
Tilt.
Pinball.
He likes the pinball machines.
Pinball machines.
He
There
likes the
you
pinball
go.
machines. It's not really.
I don't know if I've ever.
Yeah, see, he's not a gamer. I used to be a gamer.
Yeah, I can see Dennis rocking
I like
some
the
games.
I honestly think Take-Two is going to be a good buy at some point in time.
Yeah,
but
I think so too.
It's just a tough market for it because discretionary stuff is not doing that well. And we never got the PE from you, Mitch. Did you look it up?
22.
It's still pretty high. Get that thing down. Get that forward PE down to 15 or 16.
Yeah.
And you pounce on Take-Two. So I got to come in a little bit more. But it's getting reasonable. It's getting, a little bit better here. But this market, and this is going to be a good segue, we've been talking with this show. It's selling high PE stocks, and it's buying low PE stocks. That's what's happening. Everybody's asking, what's going on with Tesla? Why is Tesla getting hit? Why do you think Tesla is getting hit? You're obviously not listening to pre-market prep if you don't know why it's not getting hit. Tesla, which is absolutely getting slaughtered here right now in the pre-market. There may be news right now because that just fell $4. So Mitch is going to go hunt down the news. But Tesla continues to get hit for the main reason is that a high PE stock. This is not the stocks you're looking for in this market environment. Second thing is we don't know what Musk is doing with Twitter. He's charging everybody $8. Everybody's going to get verified. Blue check marks thrown around here, there, everywhere. Bringing some execs over from Tesla over to Twitter. We don't know what's going on, but something just dropped on Tesla because this is major volume. Tesla recall is what we're hearing from Jagger.
Really?
Tesla recall
That's
is
old,
what we're
though.
hearing.
That's old. I already had heard the recall. The recall was put out yesterday.
We're trying to find out if there's something else here then because this looks like news because it was 197 when we started the show and it just fell $3.
Yeah.
The algos got happy on something there.
I mean, this is still. I mean, you talked about a high valuation, and that's it. They really haven't even come for this yet. Now you're under 200. Let's go with this. Let's have a little fun here and see what.
I'm
that's
reading
a 2-minute chart. That's a 2-minute chart.
Support at 50.
I'm reading news, and I don't know if this is a bullish sign or a bearish sign, but Kramer said that Tesla has got the worst chart I have ever seen.
Oh, yeah, no,
and that's what's driving things. I'm still a believer. People are very concerned about the company's CEO, Elon Musk, has to sell a lot of Tesla stock to buy Twitter.
Well, you guys, he runs his own show. We got our show. So let's just.
Oh, no, trust me. I like the inverse.
But we use them for the indicator.
Yeah, I like the inverse.
You guys are
I know.
mean.
I tweeted you guys last night. Can we get the inverse Kramer ETF?
We're getting him, Dennis. We're getting him.
He's pretty funny. I don't know if it's a he or a she. Maybe it's a she.
I think he or she should get with Tuttle, man, and they should join together
No,
and have a nice social account.
It's a funny account. It's a funny account. So
hey.
I like Kramer. Kramer's funny. We know he's had a really tough year because I've already said why Kramer hasn't figured it out. Maybe you should listen to the show. Kramer's had a tough year because he's a Momo player. Momo players are not doing well this year. It's been a contrarian market. So some markets are momentum, some markets contrarian. This has been a contrarian market, unless you're shorting stocks where you can actually play the momentum on the short side because it seems like these short stocks just keep going down. So you have momentum on the downside, but on the upside, it's been all contrarian. Selling rips has worked like crazy. Tesla falling out of bed here. I still don't see what this news is here right now. I'm sure we'll find it out soon. The algos always know ahead of us. But it's not the stock that this market wants right now. They don't want to see, what's the PE on Tesla? 70? 75? What is it? It used to be over 100. I'm assuming it's coming now.
I have 60.
60. Okay, so it gets down to 30. That's where it starts to get attractive. That cuts the price in half. So this got to $100. I'd load it up. I don't think it's going to $100 today. I don't think it's going to $100 tomorrow. I don't know if it's going to $100 ever. But at this point in time, Can it go to 180 or 170 or 160? Yeah, there's no value investors coming into Tesla. You have no support in the momentum. People are out. We're talking about that gap yesterday. That gap is there on this kind of stock. There's not the support. Is it oversold? Absolutely. Can it get some bounces? Yes. But is the path of least resistance lower? I believe it is.
Before I make technical comments, where is when does he have to pony up to the banks? I mean, I don't know who his advisors were, on this deal, and I know he had to sell a lot of stock, but then he put his stock in the hands of Wall Street. So they basically have a covered short pressing this thing down. Because he's gonna at some point he's gonna have to sell, especially if he doesn't turn Twitter around for a long time. So I don't understand. I don't understand what he's doing. I don't know what his tweets are doing. Twitter was a mess before. It's a mess again.
Here is a problem for Tesla too. And to your point here, Joel, it's a good point you're making. He would shoot his mouth off on Twitter or something, or he'd be shooting his mouth off. Now he has a platform that he can't even get kicked off of. And we know his biggest issue, Elon Musk's issue, has been his mouth. It's not his brain. His brain is enormous. He is an excellent businessman. His biggest issue has been he says things, and obviously pisses off regulators. He says things that he probably shouldn't say. The whole, we're taking the stock private at 420. There's been so many examples. Now he owns a platform where he can just continue to say whatever the hell he wants. That's not good news for Tesla. Nothing about him owning Twitter is good for Tesla. Because, one, he's maybe stretching himself thin. Two, it apparently is bringing some execs from Tesla to Twitter. So Tesla is going to get less of his attention. Secondly, It's got a nosebleed PE. Third is he could be shooting off his mouth and say things that people don't like. Fourth, if people start to not like him as much, they may not buy his cars as much. So I think there's a lot of issues with Musk owning Twitter for Tesla. And if you want to be short Elon Musk, you voice your opinion through Tesla. If I had a way to short Twitter, I would do it. There's no way to short Twitter. It's a private company now. He owns it. He's going to take a bath on this Twitter. I don't think he can turn it around. I don't think it's going to be a multi-billion dollar or whatever company. It's not, it already is. But I mean, talking he's going to take it from a $54 billion valuation, which we know it's really worth about 20, to 100 to 200 to 300. It's not happening. I don't think it's happening. So I think he's going to take a bath on the Twitter. I think it's going to, upset him. I think he's going to shoot his mouth off a lot more. There's a lot of reasons not to own Tesla right now.
First stopping point would be your June 21 low at 190.41. That's about $4 away. That's a minor level, but where the big boys are hanging out would probably be 180. I see a low right at 179.83. That was back in March of pandemic was 20. So let's call it 190.41, and then let's call it 180 for some short-term targets on the downside. And now you're underneath that psychological 200 level. You got a lot of bag holders in this. I mean, then the rallies, as you can see from when it made that all-time high over 400, those rallies have gotten lower highs, lower highs, lower highs. Not looking good. Let's keep an eye.
You need a turnaround in the nosebleed names. Yesterday was not that day. Yesterday was the exact day that we've been talking about, the rotation out of high PE to low PE, out of tech into value. You're looking at two different markets, the tail of two markets right now. Tech wreck. Obviously, all the big guns have been hit, and that money has not flowed out of the market. It has totally flowed into other stocks. I mean, Caterpillar, relentless bid, lower PE name. Man. Banks are holding up very well. Bank America, JP Morgan from 100 to 130 in the last 2-3 weeks. Full on bull markets and value names here. Obviously, the energy trade, which is very publicized in the media and everybody knows about it. But the drug trade, Gilead, we talked about that. Amgen breaking out to new highs here once again today. Low PE stocks are in favor. This market is selling high valuation and buying low valuation and taking no prisoners.
Now, what do you think about NVIDIA's recent move? Because that one at least has been making it back. It's just filled the gap pretty much.
Oh, it did get up there, huh?
Yeah, so I think it's an important one to keep watch, right? I mean, will some of this start turning towards some growth names? Of course, NVIDIA I would consider more into the growth category than value. but it is getting a little bit of a bounce recently. Is this one that we can start looking for a turnaround? Dennis, what do you think?
Higher PE, it's come down somewhat though. The chips are actually looking okay. One thing about the NASDAQ, with all the mega caps when getting hit, the chips have kind of tried to base here. They kind of already got hammered. They got hammered before everything. So it's kind of logical that they're turning around ahead of things. I'm long a few of these. Micron is stabilized. I'm long Micron. You know that. AMD, I recently bought AMD. It is stabilized. You know I own Intel. Intel's a value name, sleepy value name. I actually don't mind Intel right now for the simple reason they're buying this kind of stock. Would not surprise me if Intel makes a run for 30. So I'm actually attracted to that too. NVIDIA's P is still over 40 though, so it's definitely not cheap, but a hell of a lot cheaper than it was last year. So it is still the premier chip out there. I'd rather own kind of AMD because I feel like the valuation is better in AMD over NVIDIA, but at least the chips have stabilized. With that being said, we've had a pretty good run here already. I'm not coming in and buying NVIDIA now.
You got room up to 149.59. Mitch, I know you talked about this gap here from September 12th. This is another gap here. Nice move up. I looked at the AMD, and AMD is just kind of sleepy here. I mean, it really can't trading up 85 cents today. That's a pretty long consolidation period. Once you break above 64.03. You got a gap. You got a big gap. So the Bulls need to get it. Hey, we're at 63.93, 67.66. Just one more thing, and it's probably not going to go real popular, but do you think that like Twitter is going to go the same way as like AOL and Yahoo?
No. Well, how are you making this comparison? I want to hear
Just
this
like
one.
it was the big social, it was like the thing, like AOL, and it got bought out for all this money. It ended up being a loser. So Yahoo, same thing.
It's a loser. There's no doubt it's a loser. He knows. He has said it on the Tesla call that he overpaid for this. He wanted to get out of the deal as bad as he can. He knows he paid $50 billion for a $20 billion asset.
One of the things
overpaid.
One of the things that I was saying from the very beginning was, will Elon make Twitter more of a subscription style model? And that seems like what he's leaning towards. He's not trying to base all the revenue off of kind of advertisement and data. So he's trying to push more into that subscription style model so that we start paying, and then maybe social media starts being viewed kind of like streaming services where you're paying a monthly service just to be on these social platforms. I think that's what his intention is.
Who's paying that?
You're about to see, Dennis. You're about to see. I think they're going to still pay up.
Some will. Am
They're
I going to pay
addicted.
$8 a month?
Yeah, you will, Dennis. I'll see you on there.
But listen, I can afford to pay the $8 a month.
Exactly.
You've got,
and so can majority.
A lot of people on Twitter that are struggling probably in this environment just to pay their monthly bills. So it's not going to be all of a sudden, oh yeah, everybody's got $8 to spend. So
yeah,
I think a lot of people are not going to pay.
I just think that everyone that has like some type of following will be paying because you want to continue growing your brand, right? And so Elon understands that. And so he knows that there's still going to be people willing to pay because they want to grow their brand. So if you want to be a part of the product, you're going to have to pay to play.
You know who's going to pay the $8 a month? The scammers. The fake accounts, because they got good revenue coming off of that, Joel. It's a business for them. They'll pay the $8 a month. You're going to see this happen again and again, where you're going to see verifications happen, and then all of a sudden they're going to change their names. And I know he says, oh, when they do that, they're going to be banned from the platform. Well, then they'll be banned that account, and then they'll open up another
new account,
and then they'll open up another one, and then they'll do another one. This blue check marks for everyone is going to be a complete mess. It's going to be a complete mess. I'm pretty much guaranteeing there's going to be fake accounts of everyone out there that's got any type of a following. Where, since I got verified, been very few fake Dennis Dicks because it's hard to do the blue check mark. Now they can blue check mark themselves, change their name in the profile after they get verified to me, and then you see a blue check mark and you think it's me. And it'd be a little thing different on the thing.
I don't bet against
I honestly
Elon.
think that this verification for everyone is going to be an absolute disaster.
Well, I think at the end of the day, social media was probably heading out the door with all the data requirements and restrictions. But hey, who knows? Maybe Elon can turn things around. I still have faith in Elon.
Restrictions? You think there's restrictions?
There's going to
I
be
mean,
no restrictions on this. This is
well,
the
yeah,
opposite. This is the
yeah,
free. This is what he
that's true.
wants. Free
But
speech
I
for
don't
everyone.
bet.
Say whatever fake stuff you want to say. Say it. We'll have the platform for that. If you want to just make things up, we'll allow it. You know, basically that's what he's saying. So I'm honestly, I'm very scared. I like the Twitter product. I use it daily. You know, I think the way he's going with it right now, at least the way he's indicating to go with it, is a big mistake. If I could short Twitter, I would short it right now. Maybe the way to short Twitter is to buy the other ones, though. Like before, when Elon Musk was talking a month ago, I kind of thought that, I kind of like this idea of what Elon Musk coming in. He's going to clean it up. And I think he's going to do the opposite now. I think I was wrong with that, saying that 6-7 weeks ago. I think he's making it a mess. And I think it's going to be a mess. I don't care about the $8. I'll pay the $8. I just don't want a bunch of fake accounts paying $8 too. So
we'll see if he gets it right.
We'll see what happens. Maybe I'm wrong. I hope I'm wrong. Paul says I'm wrong. I hope I'm very wrong. I hope
there's not many times you got me on the
product.
optimistic side, but I'm on the optimistic side of here. We'll see what happens with Twitter if he's able to get it right. And also, I mean, the battle is that, I mean, he fired like 70% of the staff. Can he get it right with the amount of staff he has left? That's going to be the hard part.
Dennis, what do you mean? Are you talking about pins? Are you talking about, you said the other ones are going to benefit? Meta, I mean.
Well, I'm saying if Elon Musk, and let's say we've already seen some advertisers pulling, there's already been that. If everybody starts to pull out and say, we just don't trust, what he's saying or what he's doing, if that becomes obviously, an issue here, then if the advertisers start pulling out, the other ones naturally benefit, do they not? Like a Snapchat. Not that I would invest in Snapchat or Pinterest, but I'm just saying maybe there's a short-term play there to actually be long Pinterest here or long some of the other platforms. If you think Elon Musk is going to mess up Twitter, those advertisers and whatever users, that are turned off, by whatever, are going to go somewhere else. So
I think the only one that could stand to benefit would be TikTok. I think that Pinterest
TikTok's
and Snapchat are already done. They're already done. I would be done with these stocks. I really do think they're done. It's just going to be a slow leak down till they disappear. I would not own Snapchat if you gave me a share. So
and I don't like the whole business, obviously of Snapchat. I've said that before. Been correct about it for a long time. I think a lot of people aren't using it anymore. TikTok is the one they're using. But you know what? 5 years from now, Joel, it won't be TikTok.
Will be gone. Yeah.
It'll be something else.
It'll be something else.
There is this is the problem with these social media platforms is what's cool now is not cool 3 or 5 years from now. So
and TikTok's losing, they're losing their butt. They're losing billions of dollars a year.
Do we know that? I mean, it's
well,
not even
like their parent ByteDance. Yeah, I'm looking at here from Forbes. Operating at TikTok, parent ByteDance top $7 billion.
Oh yeah, I don't think
there's not a lot of. It's hard to make money in these social media platforms.
That's the truth.
Unless
it's
you
hard
were
to
Facebook
make money
at the time.
If you're
they
free,
lost $85 billion in 21.
If you're free, it's kind of hard to make money.
Sounds like a good company to me. Okay.
Let's go to.
So we got different opinions. Obviously, we can't even place our bets, but the market is placing their bets against Elon Musk and voicing in the way Tesla shares are trading. I think
the only thing I think
path of least resistance is much lower.
Yeah, the only thing I think that can turn Tesla, of course, is going to be the two products that we're all waiting to see how they perform, which is the Tesla Semi and the Cybertruck. I think those are the catalysts that could potentially get it back.
And hopefully these electric trucks are going to have the towing capacity to do what they say they can do. Because I read another article on the F-150, another one that came out and said that the towing capacity on the new F-150, obviously the Lightning, is just brutal. That the battery just dies very quickly. So I hope the semis and Elon Musk can figure out a way that obviously these semi trucks don't have to pull over every 150 miles to recharge, because that is a game changer.
Well, maybe if they have a solar edge to them, they might be able to get up.
Let's go
to
Look
Solar
at this
Edge
guy.
Technologies.
Smooth.
As Q3 adjusted EPS coming in here at 91 cents, missing the $1.44 estimate. Sales at 836.72 million, beating the 822.37 million estimate. They see Q4 sales at 855 million to 885 million versus the 856 million estimate. Not too bad there on SEDG. And I've been looking to see if this one was going to get a good report and continue the momentum that we've seen in First Solar and Enphase. And so now one of the stocks that we talked about yesterday, Joel, you weren't here, so I'll kind of fill you in. We looked at Run with Market Structure Edge, and Run looked interesting because it was setting up. Now it's done a little bit of a pullback move today. I'm going to look to see if Run can get running again. Get going towards that 25.
Why has this one been such a laggard, SEDG?
I think it's part of that. First Solar is getting more appreciation because more of the revenue is US based. And so when I look at the other ones, you're getting more of that global exposure. And so the global exposure sometimes gets a little bit rocky with what's going on in China, of course, the lockdowns and things like that. And that's why I think you don't see like JKS just mooning Jinko Solar, because if China was reopened and doing really well, then maybe you would see this stock really ripping. But that's why it's kind of paused or delayed effects there that you see in SEDG versus like a First Solar.
I don't know if we need to even go that deep. I don't know why. Because Solar Edge P is a hell of a lot higher than First Solar P.
There you go, Dennis. That
right back to like PEs matter. Get the shirt, get the t-shirt, get the hat. PEs matter. The First Solar PE is, wow, they lost earnings, so it's going to be a mess because they lost last quarter. So it'll show. But if you look, backwards, the PE on First Solar, if you take out the losses from last quarter, obviously not looking at that, the First Solar PE has been a lot lower than Solar Edge. High PE names not in favor.
Just taking a look, we snuck our head over 240. That's not a bad level here because you had a daily high at 242.32, and then it's kind of wide open here. So this one, I'd concentrate on where exactly that pre-market high is. Look for follow through. And then if you get above the pre-market high, you take out 242.32, then there's just not much in there. I mean, if you really want a juicy target, your October 4th high was 250.45. That's only $13 away. So keep that on your radar. The next day it settled at, that day it settled at 246.17. And then 6 days later, it was a $200 stock. So a lot of people missed their opportunity up at that area last time. Let's see if it gives them another shot overnight.
All right, let's do maybe one more, sneak one in here. Let's go towards Mosaic, as Mosaic reported earnings after hours yesterday. Adjusted EPS came in here at $3.22, missing the $3.42 estimate. Sales at $5.35 billion, missing the $5.76 billion estimate. Mosaic says in potash, it maintains expectations that the annual production from Belarus will be down 8 million tons in 2022, and would be little recovery expected in the next year. So they're just kind of pointing out that the supply issues are not being resolved there in potash. Of course, that's like the main kind of needed for fertilizer. And so I think that at this point, you got to continue to see if Mosaic can get some lift today. It did pull back, of course, so I'm going to look to see if it can get a push. Been focused on these companies because they've been kind of sideways, sleepy. Let's see if this can start getting it moving.
For me, this 2-day high of 50.56 hasn't hit that yet. It's come close to it. Above that, I mean, there you go. You got a big old gap to fill in it. I guess it's not that big. Up to 51.86, coming back on the downside. If you really want to own this, you could probably get it scratch it on a session at 49.92. Triple D, any comments on potash?
Well, they got hit. Looking at Mosaic here, you can look at Nutrien last week. Nutrien missed, and NTR is an absolute mess. It's amazing how these things go from bliss to piss so quickly, which has happened here. NTR, if you look back in August, $102, new highs, everything's going well. And completely, they pull the rug out from under it. And in the last quarter it gets hammered. Now you're down here at 73, and you're like, what just happened? Momentum doesn't last forever here, not in bear markets, and we're still in overall bear market. So you're still going to be taking profits while you got those profits, or the market eventually takes them for you. It seems like if you hold on long enough, no matter what stock, eventually you lose. So, I mean, this is, obviously, for this year anyways, 2022. I know if you've held stocks the last 25 years, you've done pretty well. But I don't know here. I mean, you got hit. Mosaic got knocked on the NTR earnings. So these earnings aren't that bad, but does this look like a bullish chart to you, MOS? If we're going back to Mosaic?
No.
Not really. So I think there's lots of easier places here. I'm just laying off.
All right. So let's have a fun guest here. Dennis, I don't know if we prepped you on this, but we're going to bring in a long-time listener to the show. I would say going back to the pandemic.
Oh, good.
His name is Mike France.
Okay.
And besides trading the market, Triple D, you'll like some of his strategies. We'll talk about in a second. But this guy trades the elections. He trades the actual elections on predict.org. Let's bring in Mike France to the show. Hi, Mike.
Hey, guys. How you doing?
We're doing great.
Good to have you on.
I'm trying to compete with Dennis's trading here. How am I doing?
Well, I got a haircut, though, now. So now you look like I used to look.
The indicator's going well. That's
right.
Real
Mike,
quick.
who's winning? Who are you betting on? Who are you betting on to win tonight?
Well, I'm market neutral.
Oh, there you go.
So I do a lot of
He's learning.
But if you're giving me a coin flip, the Republicans are looking better than the Democrats right now. Republicans in the Senate are looking at like 30 to 35% chance of taking the Senate.
Yeah.
They're going to take the House almost for sure. It's like 90% chance.
Yeah.
So that's who I would bet on if you give me an even bet. But I always trade market neutral.
What do you think this means? So let's just assume that the Republicans do get control. What does this mean for stocks? Are they going to applaud this? That, or what are your thoughts here on this, Mike?
Now, I would say that's not my cup of tea, right? That's not my game so much. That's your department. Now, one thing I will say, though, is for anybody watching who's, planning on like looking at this kind of thing is, if you just have, even if you never trade a political market, if you just keep the political markets up on your screen tonight, when those results start coming in, if you just look up like the Senate, market on predicted.org, and you have that up, that's going to start showing when, it's going one direction or the other. So, right now I'm guessing the markets are building in a Republican win, but if that flips, you're going to see it on Predicted before anywhere. These are markets. They're sensitive to news. And I feel like you'd be doing a disservice if you were trading tonight in the after hours and you didn't have that up on your screen.
What time do you think you start to really get, the feel for, is like 8 o'clock? Or are we going to know before then?
Midterms are funny because it's like, all these states, the polls close at different times.
Yeah.
So when that, when the important ones that end up tipping it start going, it's too hard to say. I feel like you won't know until you're quite in the moment, but sometime this evening, the earliest.
Mike, I got to disagree with you. I think you got a long road to hoe. I think you're going to be up for the next couple days. I don't think that they're going to have these clear results tonight. I think it's an absolute mess. I think that they're
really.
I do. I don't think
you're totally right, actually. And that's what happened in the general election last time. It's like some states you're going to know, within a little bit of time of the poll closing, but there's probably going to be a few states that hold out. And if those states are going to determine, which way it's going to go, you might be right. It might be a few days. And I kind of hope for that. I kind of like the trading to keep going a few days after.
It's going to. And down in Georgia, if one of them doesn't get a 50% vote, there has to be a runoff. But talk about, so you said you're kind of neutral. So tell us how you try and play that, right? How do you become, if you're buying something, you're shorting something else, tell us how you do that. Well, not exactly. We don't want you to give away your secret.
No, that's okay. That's okay. So I'm basically market making, and so on this exchange, you are not allowed to use bots to scrape for information. So I feel like this is really one of the last markets maybe on planet Earth where all the market making is done by hand. So it's almost like market making in slow motion, like things that in the stock market probably play out in less than a second, play out in minutes or hours, in terms of putting in orders on top of other orders, and then, watching the book and, pulling your order out if you don't want it to fill as it gets close to filling. So, I'm not really looking at charts. I'm not really looking wouldn't say I'm looking at order flow. I'm looking at the book. Like that's pretty much where I'm getting all my information is just looking at the order book and putting, in buy and sell orders appropriately. But I'm really just trying to buy something and flip it as quick as I can. On every market, every market basically has two markets. So like if you're betting on like who's going to win the Senate in Pennsylvania, you can bet yes or no on the Democrat and yes or no on the Republican. So a lot of times I'm trying to kind of go, I'll try to keep it neutral, kind of like that. Like I'll bet no on both, or I'll try to lean no on both. Of course, I think any market maker has this problem where, you get hit, you get filled heavily in one direction or the other. So last night, somebody came in late in the evening and just bought Republican across the board. So, last night I ended up holding way too much Democrat, and you just kind of have to try to work your way out of those, positions when you're leaning too hard one way or the other.
Joel, we should get into this. This is like old school market making here. This is right up. This is oldie stuff for you, Joel. Bring back your old.
I feel like it is. I feel like it's like the last, civilization, or, the last island that civilization hasn't discovered yet, where it's still just like all the old way.
Now everybody knows about it because he came and just told everybody on the show.
I know. Well, the funny thing is that this might be the last election where this is allowed, because the CFTC is pulling there was a no action letter since I think like 2014 that the CFTC gave to this exchange PredictIt, and they're pulling the no action letter. They haven't really given too much of an explanation why. But this might be the last election that is quite like this. I don't know if other things will pop up, but if they do, I wouldn't be surprised if they allow bots too, right? So, this might be the last one. So I'm actually a little more open to sharing my secrets today than I was 2 years ago when I came on, because this might be it, man. This might be my last dance.
Yeah. Okay, so let's talk about you're into the markets too, right? You're a former economics teacher, and you kind of got hooked on the markets and investing and trading, listening to PreMarket Prep. And during the pandemic, and then you transitioned out of being an economics teacher, and you've translated this kind of neutral trading to the markets. I don't want to do anything that you're currently doing, but tell us about like the first thing that caught your eye, and how you traded it, and just your initial fascination, where it came from.
Yeah. So, the prediction markets were my first exposure to markets. So in 2011, I started trading the Romney-Obama election. Every few years I would keep on doing these political markets. Did some fantasy sports stuff for a few years, when I felt like I could get edge there. But, I always thought the stock market was like, it was too automated, or it was too efficient. And then I finally started looking more into it, probably about 2017. I was teaching economics at the time, started listening to you guys every morning, and just started dabbling and reading and researching, and went full time about 2 years ago. So I'm a full-time trader now. The political thing is just kind of my little World Cup thing that comes up every 2 years. I tend to like finding very weird little niches where very few other people are looking, and trying to master that niche. So I'll give you an example of one that was kind of my first really big success within the equities market, which was so the ticker GBTC. It's a Bitcoin trust, right? It just holds Bitcoin. In a lot of ways, it's a very simple product, but in a lot of ways, it's a very weird product because it never perfectly tracks Bitcoin, right? So for years, it had this premium to Bitcoin. And I was always really intrigued by this. I found out about this, probably really quickly after GBTC came out. I want to say it was in like 2016 or maybe even earlier. And I'd always just look at this weird premium. Like, why is it at 22% and now it's at 25% over NAV? But I could never really figure out a way to get an edge off of it. But I just looked at it for years. So when Bitcoin started to launch, like really go just ham, in around the time of the last election, right, like late 2020, I was, set up. I knew how to trade equities, and I feel like I had a better sense of how an overnight change in the price of Bitcoin would affect that premium. So I did a lot of trading like at the open and the close, but more even at the open, where depending on what had happened on Bitcoin overnight, I had a pretty good guess as to what was going to happen to that NAV. And sometimes that NAV would expand by like 5% in 10 minutes, independent of what Bitcoin was doing. So Bitcoin goes up overnight, the market's open, that net asset value goes from like 27% over to like 32% over in like 10 minutes. And I got good at like riding that wave and had probably 6 months where that strategy worked very, very well. That's all I did within the equity markets. I'd look at other stuff. I'd listen to your guys' show, but like my trade was that for 6 months. And then it dried up and went away and I found something else. So that's kind of what I do is I try to find these weird little pockets where like algorithms haven't really picked it up yet.
Yeah.
A lot of people probably haven't really mastered it yet. If anything, there's algorithms doing the exact wrong thing, right? And I can kind of take advantage of that. And then, other people figured out the algorithms get programmed in and I'm, I can't really hit it anymore.
And you said you think that this might be the last year, huh? Because they pulled the no action letter.
Yeah, for predicted, I think it will be. I think there's a lawsuit going on right now, so who knows what's going to happen there. I don't know the details of like what's actually going on behind the scenes with this, but I have a feeling this might be the last one on predicted.org. Other stuff may pop up, but I think it's going to be a different ball game, because of that one factor of like allowing bots versus not allowing bots. So I think this might be the last one.
Yeah. Do you feel that it will move to the sports betting books?
Well, I don't know because there's just legal issues with that too. I think the prediction market, like a prediction market, is a binary option, right? So you're buying and selling something that's going to expire at either 0 or 100. And I could go into more detail about how that works too, if you like. But I think it's a great thing to do sports betting with. But it's just, sports betting in any form or fashion isn't legal in most states. So I don't know if I see that happening anytime soon either, but I love binary options. I feel like binary options are as different from stocks or options as stocks and options are from each other, if that makes any sense. They're really a weird, different product. The math is all different. And I feel like it's the product that I've looked at a lot. So I'd love to trade more binary options if they come around with something like sports or something like that. But yeah.
Okay. And just overall, what whether it's related to the election or not, just in the market, you made that statement that, if you are trading after hours and, to keep an eye on predicted.org, if there's a flip, is there been a wicked rotation in the markets as of late? Is it something that you've identified, or are you more just kind of trying to stick with like your pure arbitrage strategies?
Yeah, I mean, I just stick with market making and arbitrage, but I mean, the trend that has been happening for like the last few weeks is that everything's been leaning more Republican the last few weeks. The Republicans have really made gains in the last month or so. And, in the last few elections, whatever the polls and the prediction markets have said, the Republicans have tended to fare a little bit better. Now, is there something to that? Is there something off in the polls? Maybe. Is it a little bit random? Maybe, right? Like if a market says something, if it says that the 49ers are going to win by 3.5 points, it's probably a coin flip whether or not they win by more or less, right? So going into tonight, like, are the Republicans going to outperform what the markets say right now or underperform? I don't know. And if they underperform, I mean, I tell you where an opportunity may come is if the Democrats flip the House, if they keep the Senate, right? That is not expected right now. I'm pretty confident the stock markets are probably betting on a probable Republican win because there's no secret. The Republicans are probably going to take the Senate. But is it that far-fetched that they don't? No, it's about a 1 in 3 chance that the Democrats keep the Senate. And if that happens tonight or in the next few days, I don't know what the impacts are going to be on the stock market, but I got to think it's going to do something major.
Look at this, 74-31. Boy, when I went to school, that was over 100.
There's some money there. Short of both. There you go. I'm short the 74.
You're discovering another one of my strategies.
I'm sorry.
No, don't be. That's no. I'm not the only one onto that strategy, but Yeah, if you just buy no on both markets, like if you go into any of these markets and you buy like the Democrats are going to lose the Senate and the Republicans are going to lose the Senate, the math usually ends now there's a fee, right? So a lot of times
the juice,
right?
The juice.
But you can still, sometimes it goes almost to the point where you could just get both, especially if you're making liquidity into it, not taking liquidity, where you can, maybe guarantee a little profit there or come close to it as you're market making. So that's definitely something I look at as, what happens if you buy both yeses or both nos? And usually both nos is a better bet, because I think a lot of people want to say,
$1.05.
I like this guy, I'm going to bet yes. So everybody bets yes, and there's this weird yes bias. So if you just bet, here's my simplest, stupidest advice. If you're going to be unpredicted, bet no on the guy you want to lose, not yes on the guy you want to win. That'll give you about a 2% edge right there.
Oh, man.
This is all good. I love this guy.
Anything else? You boys have anything else for Mike? If not,
How do we follow you on Twitter? What's your handle?
I'm on nothing, man.
No,
I'm not on Twitter.
Not even. Only here.
You guys are the only people I talk to every 2 years. Usually I'm just in a bathroom, and I let you guys do most of the talking every morning. But I'm on no social media or nothing.
That's funny.
We're bringing you on every election.
I just trade. It's just me and the numbers, and you guys in the background.
It's funny because I sent him an email. He responded, immediately, and then I just wanted to set up a phone call, and he picks up the phone, and it was like the happiest person ever to talk to me. He was like, it was a great conversation. I love these markets. You've heard about my background in binary markets. So Mike France, he is a former economics teacher, now trading the predictive markets as well as the regular stock market. And Dennis may be calling you soon because he loves those market neutral strategies. So
I want to make that
anytime.
5 cents.
I love it.
All right. Thanks a lot, Mike. We'll talk to you soon.
Guys. It's been a pleasure.
Thanks, Mike.
Thank you. Definitely the predicted markets. We'll see what happens today.
You see the market maker in Joel, though. He's like, I'm short both those, man. 74.31, $1.05 pays out $1, short them both. Yeah.
Come on, baby. I don't even need to go to stock loan.
Then the juice came in.
The juice. I'm sure I'm sure it's right there.
This is why I tell people free commissions. We don't got the juice worries, man.
Yeah, no.
We're creeping higher, Dennis.
You're still paying the juice. Don't kid yourself. Citadel's taking that spread on you, boy and girl.
That is true. That is definitely
it's
true.
in there. The juice is just hidden.
All right.
If you aren't paying for the
we're
product,
creeping
you
higher,
are
Dennis.
the product. We love your orders. That's what they say.
Dennis, are you leaning on your buy button or something here? Because we got a sustained rally.
Dip buying here in value names. The value names are just hot, and the tech stocks are just not. Where's Tesla now? Oh, look, Tesla's bounced a little bit here, Joel. We're only down $2 here now. But
I'll tell you what. Lyft isn't getting the lift they thought they would get. Let's talk about that. Lyft earnings, Q3 EPS coming in here at 10 cents, beating the 7-cent estimate. Yeah, 10 cents. Sales at 1.05 billion, missing the 1.06 billion estimate. Lyft sees Q4 sales at 1.14 billion to 1.16 versus the 1.17, so lowering their Q4 sales. They do see full year adjusted EBITDA to 280 million to 300 million with a 7% margin. So they're just a little bit above, just a little bit, Dennis. They're making a tiny amount.
There's the problem. Again, it's just, can they grow in? Can they eventually start making money? They're starting to make money here now. Do they grow into the multiple? There's going to be some of these stocks that were growth story companies that actually have fallen enough that they are going to be sneaky value stocks eventually. Is Lyft or Uber one of them? Potentially. But again, I'd rather own Uber than Lyft, so I want to kind of own best of breed always. So if I was buying an Uber or a Lyft, it would be Uber. But if you do your homework here, there's going to be some opportunities where these growth stocks have become value names. And in that case, there actually could be some, turnaround here eventually of some of these names. So I don't know if I'm necessarily shorting Lyft here, but it's good it's making money. But again, if I was buying these, it'd be Uber.
Yeah, I mean, you're loving the 1150 area. That's just been, rock solid support. I mean, so it looks like someone's even nibbling here. Pre-market low 1121. So even if you're taking a shot on this to the short side, I don't know. It was thick down here before, and that's where it found support. So look for that again. A lot of volume is traded. So $11. Actually, the all-time low for this is 1083. So that really take a whooping to get it down to that level.
5 minutes here, Mitch. 5 minutes.
Oh, 5 minutes. All right, let's keep going. Let's get to the next stock here. Let's go to
Did we talk
TripAdvisor.
Bitcoin? Did we ever talk Bitcoin?
I think we
touched
could touch it with Riot if you want. I still got Riot. We can go to Riot blockchain.
Is that still a stock?
Yeah, Riot blockchain.
Look at that.
I don't know what they're mining for, but looks like it isn't going well because Q3 EPS for Riot coming in today at 24-cent loss, missing the 2-cent loss estimate. So that just goes to show you probably how well the mining is going right now. Sales at 46.3 million, missing the 57.04 million estimate. So miss and a miss there on Riot. And Bitcoin looks like it's already getting hit hard. We could take a look at that.
Bring up the Bitcoin here, Joel.
I'm not exactly sure.
Let's look at the chart
on this move.
We'll look at the chart, and it's like supported 18,000. I mean, that's all.
Got it. That's your level. That's the line in the sand. That's what it's got to hold. You got to get that out. I can't see what's happening.
Yep, there it is. It's
it's
like
just been
18,
hanging out here for too long. They don't give you a chance to buy the lows for this long. That's from Guy Adami. We love you, Guy. He's absolutely correct. When something hangs out the lows for too long, it usually makes newer lows and shakes you out. So I think eventually the 18,000 does get breached. I think eventually, I think like what Bitcoin really is, and I was saying this on the pre-market show, like just when we were talking with each other, it's not really even a NASDAQ, like it tracks NASDAQ stocks, but it actually tracks ARKK. And the one thing we've seen recently is that ARKK is not participating in the rally whatsoever because she's still got all these nosebleed multiple names in there. Yes, even though her fund is off 75%, all of the companies she owns, the majority of them are still full of nosebleed names. It's been Tesla holding it up, and that's not holding it up anymore either. Not good for the ARK. Bitcoin, there's a lot of overlap in investors in Bitcoin that are in the ARK names and the storied stocks and social media stocks. Kind of just tracks together. If you throw ARKK on the chart with, Bitcoin there's definitely a correlation. So I think as ARKK continues to show weakness and we continue to move to a value market, that is not good news for Bitcoin. I said earlier this year, I thought Bitcoin, I said it when it was 30,000. I said it could go to 10,000. It's halfway there. I'm going to stick with that. I think Bitcoin could eventually see 10,000.
All right, we're going to change things up. I'm going to change things up here a little bit because I'm sticking around today because I wanted to bring my a special guest on. Gene Munster is going to be joining us. Mitch is going to be joining us by telephone. I told him 9. Is he lurking in the background there?
Yes, he is. I'm about to bring him on right now. Just give me 2 seconds and we'll get him on here. Like always, guys, smash the like button if you guys are excited to talk to Gene Munster. Dennis, I know that you might need to head out during this interview. You can go ahead and head out if you need to. If not, stick around. We got Gene Munster coming up. Let's get right to it. A special guest of the day. Let's get him on here. I'm just trying to get my little special guest. There it is.
Okay. All right.
All right, Gene, can you hear us?
You got everybody loud and clear.
All right.
All right, I'm going to let Dennis has got to hop in a few, and he's got some pressing questions here for you. So I'm going to come on, Dennis. You're like,
I always love talking to Gene. We haven't had Gene on the show in a while, and I always watch you on CNBC as well. I mean, I just want to start with, obviously a couple of these, the mega caps. There's been rotation out of the mega caps here for the last few months. Obviously, Meta's probably taken the most heat. Apple's held up kind of well until recently here. But I just want to kind of get your overall landscape talk on this move that we've been seeing overall from mega cap tech into like value names. Do you see this as a sustainable trend, or is eventually people going to flock back into the mega cap tech because that's what's worked for the last decade?
I think that we're going to see this rotation out for the next 3 to 6 months. And in part because if you look at the out numbers for 2024, which people are going to be talking more about in the next 3 to 6 months, they show for most of big tech, they show a pretty sizable step up again in revenue growth. And I think that there's going to be with the broader macro, my expectations about the broader macro for the next 6 months, I suspect that theme, essentially the one-liner, is that the street numbers for a lot of big tech are still too high for 2024. I think that theme is going to continue to create this rotation out. So, our sense, if you really want to know what investors think, just look at their portfolio. And in the case of our portfolio, we're now 45% in cash. If you rewind 6 months ago, we were 55% in cash. We made the mistake of deploying, and we were at one point down to 35% in cash. Now, over the past few weeks, we've been raising cash again. And so we're still not there. I still believe that for the broader 2023, there is going to be a rotation back to these companies. And I don't think all of them are going to perform equally as well in that kind of mid to back half of 23. So to put it all together I still believe that investors are human, and humans like things that are growing. And I think that even these big tech companies, despite the law of large numbers, I think just their defensibility, I think they still present some of the best long-term growth opportunities. And so despite all of the near-term issues with the numbers in 2024, for example, I think people are going to rotate back.
What about a stock like Meta that has obviously really been hit hard? I mean, it's come down, to what some people are saying is just a ridiculously low valuation here now. Everybody is now betting that Zuckerberg's plan to try to convert this to a metaverse play is not working. Obviously, some of the legacy businesses are getting TikToked. I've been using that as a verb here for a while here now. Are your thoughts that Meta is low enough now that we can start to dive in here? I'm attracted to it too, because I've seen the PE come down, so far that I'm like, man, eventually maybe there is a turnaround story here. What are your thoughts on Meta?
So we own it. We did not own it all year. We've bought it recently. We bought it ahead of the big pullback at the last quarter. We did not buy more after the quarter. And there may be an opportunity for us to do that. The general thinking is that there's an underlying question about the future of how consumers interact with tech. If you take the approach that the future, the next 5, 10, 20, even 50 years of tech is going to be, the interface is going to be predominantly variations of mobile, then there's no need for the metaverse, and there's no need to own Meta, the company. If you think that there is going to be some a progression beyond that, then it's going to be some version of the metaverse, and it's still to be determined what that is. We can talk more about what variations it could take, but it probably reasons that Meta, given the investment they've been making into that, will be a beneficiary. And so I think the topic is mostly centered in the near term around expenses. Of course, we saw what the stock did yesterday. It was up on what was old news about them cutting headcount. When they reported their quarter, the stock initially went up and then it went down based on them talking about spending more money on the metaverse. What that tells me is that near-term investors are, of course, hyper-focused on the metaverse and the spending around it. But the opportunity or lack thereof, if it doesn't play out, still should be the central question. And so when we think about the question about should or should you not own the metaverse, it's or Meta, the company, the question is, do you think that there is something beyond mobile? Is it Web 3.0, which is an acronym for the metaverse? And if you think there is something beyond it, we believe that probably Meta is going to participate in that. It may take, it could be as early as 9 months before the light goes on with investors when Apple comes out with their mixed reality headset next spring, or at least they show it next spring. I think that's likely. Maybe that's when investors start saying Zuckerberg's onto something, and it may be a couple, 3 years. But I think given the valuation, given that creates a risk reward profile that I think is favorable. So ask yourself the question, is there something beyond mobile? And I think that's going to determine whether or not Meta is a good stock for you.
We're on the line with Gene Munster, who's managing partner of Loup Ventures, joining us here. Gene, I got a question for you. How much time on a daily basis do you spend in Metaverse?
I don't spend any time in the Metaverse because I think that at this point, the Metaverse is it's a concept.
Okay.
And I think that, there are the Metaverse kind of and where it's going as a concept. If you would say, how much time do I spend in what I think is like a preliminary version of the Metaverse? I think it's probably 3-4 hours a day on Zoom calls. I think that's kind of a starting point. Yep. And then if you'd ask teens, of course, do they spend time in the Metaverse? They would say no. But anybody who plays Roblox or I can't forget, I'm thinking of the game that kind of predates Roblox, but I think there's
Fortnite?
a game. Not Fortnite. It's the one when you build worlds in it. Microsoft bought it.
Where in the world is Carmen Sandiego?
Yeah, not quite that far back, but it'll come to me. I'm sure listeners know exactly what I'm thinking here.
Sims.
That's not Sims, but
Minecraft.
Minecraft. Thank you. That's what
we got to start chatting. All right, let's go on to Tesla here. You accurately predicted that deal would go through with Twitter. And I was once there on the other side of the trade there, and it's gone through. I mean, there's pressure on Tesla stock now with the Twitter, with Tesla. I mean, now that the deal is done, and now that the stock still trades at a very, very high valuation, we know what they would do in stocks like that. What's your outlook here? Is this just be patient, wait and see here with Tesla, or if things change fundamentally at the company?
I think it's getting near-term more attractive. I've been a long-term believer in this. None of that long-term optimism has changed. Just to give you some context, and the latest, the near-term is that Twitter's taking up a lot of Elon's time, more than what I would have imagined based on the interview he had with Ron Barron last Friday. And that's a negative, and we have to just account for that. And what that means is that, there's probably doesn't mean a whole lot to Tesla's business beyond it's a negative because it's just a concern for investors, and therefore that has a negative impact on the multiple. I don't think it changes any of Tesla's business. If you look at, I was mentioning that earlier about big tech and the exercise about 2024 and growth rates kind of being too high, showing reacceleration, and they need to come back down in, is that there are a couple companies, Apple and Tesla, kind of stand out amongst the 6 or 7 biggest tech companies that the modeling is actually pretty reasonable. And in Tesla's case, it's going from mid 50% growth this year to mid 40% in 2023 to mid 30% in 2024. And so, Joel, I think when you put it together, I think that the street's generally modeling this correctly. I think that I just still believe that it's a lot harder to build an electric car than just than it would seem in this. And I can go through like specific examples of it, but the idea that traditional car companies can still, I think, close that gap in the next few years is I think they're going to have a tough time of it.
Okay. All right. Let's move on to the big dog here. Apple definitely, had the earnings report, rallied, gave it all back, pressure underneath the market, iPhone supplies. I know you do your own channel checks, but the reason I've been, and I think I've got this for you, correct me if I'm wrong. Apple, they're going to get more out of the people. They got a lot of people using their devices, right? And if they, maybe they're not going to be selling as many iPhones as before, but isn't there other places that they're going to start to, from these, billions of users that they have? That's what I'm looking at. What's your thesis on Apple?
That's the kind of the substance of the current business. I think one of the benefits of Apple is that you get the benefit of a business that is working, and part of working is what you just described, selling more stuff to existing customers. And the more stuff thing is probably around actually Apple Watch, and over the next few years, it's still relatively low penetration. Right around 15% of total iPhone owners have a watch. That number could be 50% over time. I think that what they're doing in their subscriptions businesses, they've obviously just raised the price. That adds 1% to earnings in the next year. It's small, but that you have this kind of the substance of the business. One other piece is the Mac doesn't get talked a lot about. It's 12% of revenue. It grew at 25% last quarter. The overall PC industry was down 40%. And so, there's something going on. I think it has rifts of people doing more work in hybrid environments and wanting kind of better, more reliable tech, and Apple plays well into that. So I think that there is other things that they can sell into. I do think that Apple is at risk over the next 3 to 6 months, just like the rest of big cap tech, just for multiple compressions. I don't think any of these companies are going to buck that trend over the next 3 to 6 months. But the other piece is, they have this stable business. If you have the luxury of looking out past 6 months, a stable business, and there still is optionality. Whether it's something in the metaverse, Apple will never use that term. They don't want to give the company Meta the satisfaction of using the term metaverse, so they'll refer to it as kind of AR or something. But there's something around that. There's something around health, and they want to do something in automotive. It's hard to say what form that's going to take, but it's pretty rare to have optionality value that's that big. Tesla also has big optionality value around FSD and Optimus, so they have some similarities in that sense. And so I think when you put it together, I still believe that Apple should be a much bigger company. I think that probably goes lower in the near term, the next 3 to 6 months, but I think still poised very well for the next 5 years as they get into these new markets and build off of a good core business.
All right, I'm going to jump in here. Gene, I wanted to ask you about the tensions that we're seeing right now with China and the U.S., the chip battle. I saw the NVIDIA talk about how they found maybe a workaround outside of the China export ban. Do you think that this is going to be affecting more technology, and we should definitely keep a watch on the battles right now with the U.S. and China?
Definitely. It is it's the thing that keeps me up at night related to Apple is how this is going to play out. And maybe I think that's probably the cornerstone company around this topic. And if you just kind of look at the numbers really quick, they report this a year late. And so we just got the 2021 supplier list numbers, and they don't break it down in these terms, but you can back into it. Approximately low 50% of Apple's revenue was assembled or produced in China in 2021. That's down from low 60% in the previous year, so it went down. And of the new additions to their supplier list, there's 150 new additions. There's about just under 800 total. The 150 new additions. Of the new additions, about 80% of those were outside of China, which tells you Apple gets it. They want to, just look at what they're doing. They want to reduce their exposure to China. And I think the reason is that they see exactly the same things that we see, is this greater tension amongst the U.S. and China. And so what is the apocalyptic event that potentially could happen? That's pretty obvious. That's something happens in Taiwan. I think the probability of that is very low. But you don't want to stick around and wait for that to happen. And so just to kind of play this forward, this is going to be just an incredible topic, especially, it's timely given today. And I think what specifically our midterm elections, but also the next presidential election, China's going to be a punching bag. And it's going to take the form of more of these restrictive trade agreements around technology between U.S. and China. And China's retaliation is going to be making it a little bit more difficult for tech companies like Tesla and Apple to do business there.
Let's wrap it up with Amazon real quick. We're getting a question on that one, and then we can wrap it up for today. Amazon trading under $90 at one point last week. Give us your take on Amazon.
Same camp as the rest of big tech. Near term, likely under pressure. Long term, they're doing something that no one else can do. They also have that dynamic where they had that kind of acceleration in revenue growth in 2024. We do own Amazon. We continue to own it. We believe in it despite what is probably some of the near-term challenges. And I think at the end of the day, yes, it's an e-commerce company, but the logistics part is their biggest defensible piece to it. So we're still there.
All right, we've been on the line with Gene Munster. He's a managing partner of Loup Ventures. Joins us to give us his take on the earnings season. Waiting to deploy some of that cash. Do you have like an S&P level? Do you have levels in individual stocks? Because are you waiting for that October low? That's a long ways away, Gene. 330 handles. Any general idea where you're looking to redeploy?
The near term deploy point would be some form of capitulation. Don't know what would trigger it, but around 3,000 on the S&P.
Holy mackerel. Okay, well, we're going to end the show on that note. It's quite a ways from here. Thanks a lot, Gene. Thanks for you guys sticking around. If I could get my computer to work, I'm going to hop over to PreMarket Prep Plus. I tweeted out the public link for you guys to join and bang out some tickers. Mitch, great to be back, and I'll check in with you later on.
Definitely have a good one, Joel, and definitely keep up with Joel Elconin on PreMarket Prep Plus. You guys can go check it out, premarketprep.com. Join up today. Now I'll get you guys over to some live trading action, and then later today we got some great show for you guys. Stick around. On Stock Market Movers, I got an interesting interview that you guys might want to check out. It's going to be at 1:15. We have Randy Frederick. Of course, we're going to be talking about the overall market, but I got a senator on, former senator Cory Gardner. I'll be speaking about certain topics that are going to be talked about today on the election day. So don't miss it. Stock Market Movers, 1 p.m., 1:45. I'll see you there. Now to get you guys over to, of course, none other than live trading. That's going to be starting up. We have a great day here on Benzinga. It's election day. So go vote and let's find out what do we got today on live trading. Coming up next, hit the thumbs up if you guys enjoyed today's show.